Hello and welcome everyone. The Wall Street Blockchain Alliance is very proud to offer our latest webinar, Tokenization at Scale, Infrastructure for the Digital Asset Era with DTCC. I'm really happy to have Ada and Otto with us here. Before we begin our usual bits of housekeeping, please keep in mind that this event is offered for general information purposes only, and it is not really meant to constitute investment, accounting, legal, any kind of advice. The views and opinions expressed really are our own and don't necessarily reflect the opinions of our respective firms. And obviously, this webinar is being recorded. Please hold on to your questions and submit them in the Q&A box for us. Otto and Otto will present and speak to that a little bit later on as well. We'll reserve about 10 minutes for the Q&A as well. Otto, Ada, it is a pleasure to see you both. We've got colleagues across the ecosystem who are dialing in, and I'll kick it off. Ada, I've been in Wall Street long enough to know DTCC. Before it was DTCC and it was just DTC. That sounds weird. Right. DTCC goes back a ways and quite a bit goes through it. Recently, well, let me start there. Tell the audience about DTCC, Ada. Tell the audience about DTCC Digital Assets, which has been around for a bit. And how did you arrive at the place that you're at with DTCC?
Yeah, absolutely. And Ron, thank you for having us here. We're very excited to be with the team here for the next hour and talk about all the work that we've been doing. DTCC, as many of the audience members here may know, is the central securities depository in the U.S. that supports U.S. financial markets. It provides mainly, among a variety of products and services, DTCC provides clearing and settlement capabilities for the U.S. financial markets at the capital market scale. It automates and standardizes the processing of financial transactions, mitigating risk, increasing transparency, and enhancing performance for thousands of broker-dealers, custodians, banks, and asset managers. It is an industry-owned and governed firm, and it processes about 2.4 quadrillion transactions across 150 territories annually. I couldn't even tell you how many zeros 2.4 quadrillion transactions is, but I can imagine just based on what I see here day to day with my DTCC colleagues, the amount of resiliency and security that takes place when processing transactions for financial markets. Otto and I have a background that's both in financial services and in digital assets. And we were there when the blockchain technology started emerging back in 2008, promising to offer global scale consensus. As the team here knows, since 2008, there has been a proliferation of blockchains and other solutions and services to support assets in digital form, driving all sorts of innovations in the industry and presenting new products by which capital markets can be more and more efficient. We all know, and I believe because everyone is here, we believe that tokenization is transforming the financial markets and are big advocates of it. But tokenization presents complexities. Issuing an asset on chain is only one aspect of operating in financial transactions on chain. There's other components such as integrating supporting technology, building operational framework, maintaining standard procedures, and ensuring seamless data connectivity between on-chain and off-chain, so that large transactions at scale can operate and be efficiently transmitted on a day-to-day basis. With the emergence of new solution providers, the industry, I think, started experiencing more fragmentation in the blockchain and digital assets ecosystem rather than the convergence and the introduction of efficient processing across multiple parties that will then enable liquidity. And that's sort of like the dream that the industry strives towards. The board and the executive team at DTCC recognized this challenge a couple of years ago and saw an opportunity for DTCC to take a leadership role in facilitating the adoption of digital assets. And really, truly, this was the impetus for the acquisition of Securrency back in late 2023, and Otto and I both come from the Securrency acquisition into the DTCC Digital Assets team. Once we were acquired, or once Securrency was acquired, DTCC effectively introduced a new business called DTCC Digital Assets. And since then, we've been working diligently to continue to develop our products and build use cases for the industry that are resilient and scalable. Through our work, we assist financial institutions in navigating and scaling with the digital asset landscape, as well as develop use cases internally within DTCC that come from a request from clients or other industry participants to enable the facilitation of digital assets operations at scale. Otto and I work in the business development team, and we're really happy to be here today to give you a presentation on the work that we've been doing and the products that we offer, as well as show a demo of an asset issuance towards later in the webinar.
Ada, thanks so much. And for the record, someone in the audience will probably correct me if I'm wrong. I think quadrillion is 15 zeros.
Okay, great.
I remember reading the data and thinking that's a whole lot of transactions. Ada, I want to talk a little bit and rip up the script just a little bit before we get to the platform itself. One of the things that you and I and Otto discussed was the ease of tokenization and how embedding that in what DTCC does and its global client base is key. DTCC launched ComposerX recently. Talk about why the streamlining of token creation was important. Talk about how adoption looks for the roadmap of what DTCC is doing. And I know there's different parts of the platform, so I do want to give you airtime for that. But to me, it starts at ComposerX, but tell me what, where that goes.
Yeah, absolutely. So the tokenization of an asset is just the beginning of a journey of adopting digital assets. We're seeing a lot of asset managers and a lot of issuers bringing assets on chain, partly because that presents a new venue of distribution and a new venue for liquidity for these service providers or financial product providers. However, once the asset is issued and the first recipient receives it in their wallet, that stops there really. Like for other activities to happen to make the market more efficient or more liquid, there's a number of processes that need to be put in place so that the facilitation of money can take place. DTCC Digital Assets has developed a series of products to be able to service the digital assets across the end-to-end process of the life cycle. That means that we can support the asset at issuance, helping our issuer clients bring assets on chain, as well as helping our broker-dealer clients, transfer agents, custodian banks, and other service providers, giving them the tools that allow them to be able to facilitate the same services that they provide in the traditional business, bring those services in the digital asset side of the business. I think there's, we'll dive more into this a little later, but there's the opportunities there are immense, right? And I think all of us here understand where efficiencies can be gained, where new distribution opportunities are. But really, and this is part of the work that Otto and I do day to day, it's navigating through the challenges in implementing these solutions, bringing them to life, as well as creating the standard operational procedures so that these solutions can have the same resiliency that capital markets at scale can require. Not can require, will require.
Ada, let me ask this question, and it's tangential to what you just mentioned. When we talk about to our colleagues on Wall Street, when we talk to our colleagues in capital markets, I'm old enough to remember T+3, T+1. I used to do international work, and it was T+30, depending on what country you were operating in. How important and how hard is the selling point to buy-side and sell-side participants, particularly around efficiency of settlements, cost efficiency and effectiveness of settlement, and being able to collapse the timeline to doing that? I guess the long-winded question is, are they getting it finally?
Yes. So the time to settlement is critical. Time to settlement is critical because when an asset is not settled, that effectively that liquidity or that capital is locked until it's delivered to the right participant. To your point earlier, we've seen the transition of time to settlement decrease with every technical innovation that has been presented to us. Actually, to be honest, back 50 years ago when DTCC was launched, time to settlement took for as long as it took for one party to deliver a stock certificate to the other party, to their counterparty, right? So if they were on a bike, it could take a couple of minutes, but if the paperwork is so big, it could take more than a few days. DTCC was formed to centralize that point so that there was one point of contact and those stock certificates and asset units would come into one place and then delivered to the right party. And the diminishing time for settlement started with T+7 to T+5, T+3, and just last year, DTCC announced and put into market the T+1 settlement timeframe, which, you know, being here in the office and seeing my colleagues work through that process, it was something that they all rallied, the industry rallied towards, to be able to have that, because it is very important for the end investors as well as the buy side and the sell side to have access to the asset that they are acquiring. You know, settlement is also important for other types of transactions, right? So there's the investment component, but then you have other transactions such as such as collateral management and lending that require this liquidity to be released so that capital markets can operate more efficiently.
Ada, my crypto native friends will say T+1 is too long. It should be instantaneous. I think we've got a ways to go to get to that point. Ada, let's talk about ComposerX. Let's talk about kind of the foundational of the DTCC series of platforms. Who's using it? What's its use case? And if you could tie that into some specific examples. So many colleagues in the industry approach us with, what about equities? What about commercial paper? What about, you know, all of these different kinds of instruments? Tell us about ComposerX and who's using it.
Yeah, absolutely. I think it would be beneficial if I gave an overview of ComposerX and the products that are part of that platform, and then dive into the use cases, because ComposerX is it's essentially software. They are solutions that are offered to our clients to build use cases upon it. These solutions are asset agnostic, meaning they are built in such a way that they can support the operations of any asset, whether that's a bond that operates a certain way or a fund that operates a completely different way. The capabilities and the features of the products can be configured so that it supports the needs of that asset. In our product portfolio that we call ComposerX overall, there's three main products, and I'll share my screen now just so I can share one slide. Excuse me, not that one. Oh, can't. Okay. Do you see the ComposerX slide? I just want to make sure.
We do.
Okay, great. So in our product portfolio, there's three main products that we offer. Starting on the left-hand side, we have Factory. Factory is a powerful tokenization engine that allows for asset managers to issue assets using a framework that we've developed over the number of years that take into consideration key components where you can embed rules and compliance and data into the asset itself that you're issuing. Factory is accessible to our customers via GUI, and it is a Web3 tool that connects you directly to the chain via a wallet. And in that, and by the way, this is the tool that we're going to demo later on. And in that, in Factory, you are able to not only issue assets, but also create transactions or codified transactions, such as collateral management or lending, using the capabilities of smart contract. So when I was talking earlier about the fact that we're asset agnostic, Factory in this case provides the capability to tokenize, or rather create a smart contract framework that represents an asset and then deploy that asset on chain. There's three main capabilities that Factory offers that make it very unique. One is the ability to customize or create what we call token strategies that have the ability to issue tokens that are standards or traditional standard tokens that we know, such as an ERC20 or an ERC3643, for instance. And on top of that standard construction, you can also add additional capabilities that helps you configure compliance rules, add limits to who can interact with the wallet, and have the ability to codify behaviors of that asset. The second key component of Factory is the ability to manage data. As a user is creating a smart contract that represents the asset, the user can also create a data schema that allows the user to embed data properties and data attributes that can then be tracked through the lifecycle of a token. So as the token is in operations, the data that represents that asset is consistently is consistently on-chain with the token itself, and it can lead to more discoverability as well as the management of things like security reference databases and the ability to embed new data as the asset grows and is continuing in operations. The third component of Factory is the ability to add role-based access control to the asset itself. What this effectively means is that the asset itself, an issuer can assign roles and can assign functions that particular role can perform on the asset. So for instance, you can create a role that is called, transfer agent, and the issuer can then say, this role is transfer agent. Transfer agent functions are going to be operated by this wallet address, and that wallet is going to be able to perform things such as minting and burning on this asset, and it is the only delegated authority that can do so. So by including these three components into Factory, you now effectively have the means to issue a token that represents an asset and an asset that is controllable by the parties that the issuer has delegated that authority to. ComposerX Capital Markets Platform is our second product. In reality, it's the first product that Securrency has been working on, and it's a product that has been in the market supporting asset managers to perform functions such as transfer agency functions and record-keeping functions. Capital Markets Platform supports the entire token lifecycle that includes anything from investor onboarding, so the ability to create accounts that belong to an investor and apply and give those investors the ability to have wallets registered to their own accounts. It gives the ability to process transactions and process trades. So if there's an order happening between investors or an order in primary markets, the APIs that are the contract of Capital Markets Platform allow for the facilitation and the delivery and the settlement of that given transaction. And lastly, Capital Markets Platform is the tool that truly has the transfer agency functionalities into the platform itself, which means that an operator of Capital Markets Platform can perform functions such as shareholder record keeping, processing of dividends when a dividend is announced, the ability to perform reporting for regulators as well as for their clients, and the ability to manage, the ability to do things such as clawback, which is effectively the ability to retract an asset in the event of a bad event. Capital Markets Platform is really meant for enterprises or for institutions that want to perform their functions end-to-end on a given asset and manage really, the process from issuance to the ability to onboard clients all the way to settling the transactions and reporting on the transactions. Lastly, the last product in our suite of products is LedgerScan. LedgerScan, and its name is very telling of what it can do, gives the ability to monitor transactions across multiple blockchains and report on those transactions, represent the data in a UI of the transactions in a collated way. A simple use case for LedgerScan is, let's say an asset manager is issuing an asset on blockchain XYZ. Later in the life cycle of that asset, the asset manager decides that another network, another DLT would also be a great place to deploy this asset, the same basically token and the same investment fund or a given asset. That means that now you have the same asset in two different blockchains operating into different protocols, and the ability to read the data between blockchain A and blockchain B can be cumbersome, right? Because you're using the blockchain explorer for one blockchain and the blockchain explorer for the other, or the scanning mechanism for the other chain. LedgerScan really collates all that data, and on top of it all, it gives you the ability to augment the data for a given asset with other non-blockchain data. So for instance, if you want to bring in a pricing stream from a pricing provider that is associated with your given asset, you can take those data points, collate them alongside with the blockchain data, and that gives you a comprehensive view of of how your asset is behaving, and it gives you the actionable insights you need to have in order to execute on your day-to-day activities. So overall, this is the ComposerX suite of products. I try to move as fast as possible. Each one of these products deserves its own webinar. But what we've done, and this has been years in the making for us to build these products. But the goal that we've had from the onset was to build an infrastructure that supports digital assets. And those digital assets can be a bond, can be a fund, can be any type of asset that the issuer wants. And the configuration of the operations of those assets can be done so by using the 3 different products. Also, it's important to say that each product can be used as a standalone. That's why they have been separated, so that, depending on a client's needs, we can offer the products as standalone.
Ada, thanks so much. And I know we've got Otto going to do a comprehensive demo first. Really appreciate it. Ada, with the ComposerX platforms, let me ask a couple of questions without naming firms particularly. What are you seeing? What are the types of firms that are really first out of the gate trying to work with ComposerX? Or what are you strategically targeting from given the platform's capabilities?
Yeah, absolutely. The right out of the gate, the firms that are mostly interested in this are primarily asset issuers, and in the capital markets ecosystem, they are asset managers. Asset managers, as you know, given the work that BlackRock has been doing, Franklin Templeton and WisdomTree, asset managers are now recognizing that there's a new venue of distribution for a new set of investors that only operate in the native world, right? So this is sort of like the early adopters of the Bitcoin and the cryptocurrency space that are used to operating wallets and are used to operating in the DeFi ecosystem. But now, as that wave of investors is maturing in age, maybe if I can say so, they're looking for other assets that they can have access to, that are assets that are more mature, more safe, more reliable, more controlled. And at the same time, they don't want to give up the efficiencies of what the Web3 ecosystem provides. So asset managers are really, they're seeing that there is this trend going on, and they're rushing to bring their assets on chain. But as these asset managers are traditional asset managers, they are looking for the operational framework that helps them support their day-to-day activities on a given asset.
Otto, I don't know if you noticed the age joke that Otto threw at both you and I. But I know Otto, totally joking. Let me ask you one more.
Generalize.
And let me ask you one more
Otto.
question, and then give Otto the floor. Certainly want to dive into the specifics of it. And I see some of the questions coming in. Again, everyone in the audience, thank you so much for joining us. If you've got questions for Otto or Otto, please queue them up. We will address them in the last 10 minutes. Otto, we've talked about scale. That's the kind of the title of the webinar. When we talk about and look at market adoption, what are those challenges to scale? And like, what's the DTC roadmap to get there?
Yeah, absolutely. So one thing that I should probably add to my previous point is that other than asset managers and other market participants, the technology that DTCC effectively acquired, they acquired it so that they could create an efficient market and help the market adopt the blockchain ecosystem while creating the same operational efficiency and procedures that take place, or similar, I should say, that take place in the in the traditional ecosystem. The challenges, and these are the challenges that Otto and I see day to day. There's as I mentioned earlier, tokenizing an asset is the easy part, but operating it is the hard part. And in operations, things like setting up standard procedures on how to operate a day-to-day activity on an asset is something that we work with our clients consistently. From the operations perspective, then the question begins to emerge, which is how do we manage a wallet infrastructure, because wallets are effectively accounts, and in traditional side, accounts are typically managed with a hierarchy, meaning you have a person that operates an account, but if there's a threshold on how much money can be moved out of that account, then you need a second layer of approvals. And this is just an example of operations, right? Now with the Web3 ecosystem, a wallet address gives you the ability to, act on that asset, right? But when you think about the layering and the procedures that are very familiar in the in the traditional asset space, then you need to translate those SOPs that we're so used to in the digital asset ecosystem. And this is a challenge, and I don't think it's not necessarily something that it inhibits adoption, but it's something that the industry, we as a whole, as an industry, need to solve for. And DTCC takes a leadership role in it, but we really need the industry to take this on this journey with us, right? Because effectively, the digital asset ecosystem also has a big impact on their own businesses, right? So a lot of our clients are really figuring it out, how do digital assets affect what I do on a day-to-day basis, right? If I'm a broker dealer and my job is to provide assets for my investor clients, what does the infrastructure look like for me to do that for digital assets? So that's one challenge, basically the management of wallets and management of accounts in a tiered approach. The second thing that we're very excited to work on, and by the way, we're very excited to work on all of this, right? It's just that every day you learn something new, and that's part of the fun. The second tier, the second component or second challenge is the ability to create a procedure by which you issue an asset, right? So in today's world, when an asset gets issued, depending on the asset type, it takes anywhere between 30 days to a year for an asset to come to market, right? Depending on the asset type. And the reason why it takes that long is because you have multiple parties that are involved in this process that include the investor itself that's asking for this asset, underwriters, originators, legal participants, legal firms, and compliance managers, all of them who have a part of a job to do in order to bring this asset to life. Now, we don't think that this is going to go away anytime soon, if not ever, right? But the ability to take all that data that is produced as an outcome of all this work and embed that into the token, that's a process on itself. We've designed Factory to do that, to help our clients do that, right? But how the industry adopts that kind of framework and then decides to, have blockchain engineers work hand in hand with the originator and the underwriter and so on, that's something to be seen. And frankly, we're very excited about it ourselves, right? But it's an area that the industry is sort of learning on the go. And then the third challenge is really the integration between TradFi and DeFi or Web3 ecosystems. What I mean by that is that in order for us, this is sort of it's a step-by-step procedure, right? Meaning, you issue the asset, that's milestone one or step number one. The second piece to figure out is, how to get that asset to the investor. So the connectivity between what the data and the paperwork that is on the traditional side and how to bring that and connect that to the systems that operate on the Web3 digital assets ecosystem, that's a lot of technical integration, right? And it's a lot of technical integration and configuration that takes place. It's not something to shy away from, but again, this is an area that is unknown for most parties, and we're all in the industry. We're all working to figure that out.
Ada, thank you so much. And this will be my last question. I'm old enough to remember having early blockchain conversations on Wall Street 10, 11, 12 years ago and being thrown out of the room. Let me ask you this question, Ada. Is there still some level of reticence or resistance in those conversations? Or is the ecosystem of TradFi embracing some of what the innovation that ComposerX represents?
Yeah, absolutely. So I think everybody's embracing it, or most people are embracing it. It is an area of growth and learning and opportunity at the individual level, but it's also everybody believes that efficiencies will make everyone's lives better, and more liquidity is going to make the global economic system a lot better, right? So everybody buys into the promise of the innovation that blockchain brings. The challenge is there's different layers of education and understanding of how the technology work, and frankly, it can be intimidating to some folks, right? We have a lot of, or we encounter people that sometimes will say, it works just fine, why change it? Yes, it could be better, but it's safe and secure and it does what it's supposed to do, so why change it, right? And that is a factor of, it's part of the learning curve, right? Getting to learn a new terminology, getting to learn new procedures, or even the process of setting up new procedures can be a little daunting. But for the most part, I think when folks understand that this is a journey that they cannot escape from, and tokenization is here, and we're able to operate a more efficient market with it. I think people get excited, and we see a lot of creativity, to be honest, coming in from these individuals.
Otto, thanks so much. Otto, I'd love to give you the floor. We've got a demo ahead of us. And for everyone in the audience, again, thank you so much for joining us. If you've got questions, particularly as we go through the demo, queue them up in Q&A. We'll address them. Be warned, Otto, I'll probably put my old product management hat on from a couple of lifetimes ago, but take it away, my friend.
Please do. All right. Hello, everybody. My name is Otonino. I'm a director at DTCC Digital Assets. I work with Ada in the business development team, and I'm responsible for the technical support to onboard our clients as they come and adopt our technology. As Adam mentioned, there are 3 products, but we're going to focus today on one that we consider the seeding of the whole digital asset chain, which is the tokenization, the capabilities to bring on-chain any financial asset. So I'm going to go ahead and show you Factory. And Factory is, what you're seeing here is a web interface that we have created to facilitate the adoption and the interfacing, the using of smart contract technology and blockchain technology in order to create the digital assets or recreate the operation of those assets on chain. To walk you a little bit as to how to navigate through Factory, what you see here in the top right corner is the information of your digital wallet. The way you interact with blockchain, the way you interact with smart contracts is through digital wallets. We support any kind of digital wallet, especially the Ethereum wallets. And once you connect to the application, you will be able to see also the information of the chain, the blockchain, the network where you are connected. It is very important that your wallet is connected to the same node and the same chain where the factory is deployed so that they can communicate and receive the transactions. On the left side, you will see the different modules with capabilities that are offered to not only create and design the asset structure, but also bring asset operations and business operations and logics into the digital world via the construction of a smart contract. Today, we're going to focus only on 3 items, which is the tokenization capabilities, the data capabilities, and the compliance capabilities. Basically, because are the ones that we consider core to the creation and adoption of compliant assets. So let me walk you through it. I'm going to aim to walk through the creation of a digital fund in 3 steps. And we start with the selection of the token. Let me talk a little bit about the three areas before I start creating the token. The tokenization capabilities basically allow you to choose and select and define what transactions, what actions can be exerted upon the token. It begins with the choosing of a fungible or non-fungible token. Fungible allowing you to transfer the token and exchange the token on a one-to-one basis. Non-transformable tokens are basically used for processes that are not supposed to change. The data component, and as Adam mentioned before, one of the biggest challenges for the industry is the standardization of data. Bringing the data into the token allows for bringing the logics, allows for a standardization of data, allows for reconciliation, and also allows for the interoperability of legacy systems with the blockchain, which is something that we need to aim in order to bridge into the digital world. Then let me talk a little bit about the compliance. How do we make these tokens compliant? At the end of the day, policies and rules and regulations are data. They are data instructions, they are database logics that the asset or the institutions need to follow. So to the extent that we can bring that data into logics and segregate it from a risk perspective basis on what we call risk-based assigned controls, the token will be able to comply with any rules, with any specifications that we make seamlessly and without any interpretation or intervention of human act. This ties a little bit into a question that I saw from the public as to how to reconcile and how do we do to manage forward-looking dates. You will see that one of the capabilities of the smart contracts is to bring actions that will be taken upon in a future date. And then with this infrastructure, reconcile it towards legacy systems. So knowing that our asset can be tokenized, can be followed, have a structure of a standardized data that represents the asset, and then can be made compliant, let's actually walk the walk. We're going to start with the token selection. And as I said, I'm going to choose a fungible token so that it is tradable. When you come to this screen, you will see the 4 strategies that Ada mentioned. These are pre-constructed templates you wish, that compile the functions that can be exerted on the token. They start with the most basic, which is a basic ERC20 token that is mintable and burnable. And upon that, we have stacked up other data schemas that will add control capabilities, that will add transferability capabilities, as well as compliance capabilities. For purposes of this demo, I'm going to choose the more complex and most rich strategy, which is the revocable compliance. That, as you can see here, will allow me to mint, burn, freeze, pause, clawback, and assign wallets in a whitelisted list to delimit the number of wallets that can actually hold, transfer, or interact with that token. Let's go ahead and choose that one. As with any other financial asset, there has to be some description and information that describe the asset for record purposes. So I'm gonna create a new asset, and let's, for the purpose, let's call it Newport 2, because I created one before, digital fund. I'm gonna choose a token, sorry, symbol, and an initial supply, which is the number of token units that you will expect to issue at the beginning. I'm gonna record the name for the issuer, and then I have the basic description of my asset. As we move forward, then it's time to add the data. I can add it at this point, or I can add it later. Let me add it later to explain then what is the data. Data is properties, right? There are concepts of data, there are data inputs that we can take from on-chain or from off-chain databases. The data composition that you create for an asset, for example, for a bond, differs, and is what it differentiates one asset from another. In a bond, you will have coupon rates, you will have maturity dates, you will have payment dates, whereas in, for example, in the fund, you probably need to have NAV calculations, distributions, redemptions. There's differences. All those differences represent data points that will guide some actions. So with Factory, you can create a whole library of the properties that will allow you to represent the nature of the asset and the operation behind that asset by compiling them. What we do with Factory and we offer with Factory is the ability to create smart contracts that we call schemas that serve as templates that you can easily reuse to create more issuances. So every time that you issue a fund and every time that you issue a bond, for example, as long as you maintain the same structure, you can simply choose the same schema. At the same time, allowing for standardization, you will be ensuring that anywhere where that asset is traded or settled, the information will be the same. And this is going to help the industry also to scale up. In addition, one last point is that by simply adding a new feature, a new property, or replacing a new property, you can make a single asset tradable or recordable in any other jurisdiction by changing those properties. The compliance, as I mentioned before, is copies of the roles and the allow list. The allow list allow me to create list of the wallets that will be interacting and holding that token. Usually I will have, if I am a service provider in the financial industry, I could have several clients with different portfolios and different instruments that I need to control or to service. Think of a TA that can be equally managing funds as well as equities. And I want to segregate so that no token can be transferred from one another without my permission or my action. That is what the allow list permit us to do. And with the roles, we add control by creating a specific roles that can operate only in the specific function that we want to assign to them. So by creating a role, I'm creating a wallet that will hold the rights, the control rights over the actions that I have assigned to it. By default in Factory, the creator of the asset, the creator of the token, is going to hold the whole control, the root control of the asset until it is delegated to any role. And that's why, for example, in the basic strategy, if you don't have the ability to delegate, the issuer continues to be the operator of the asset. So in summary, you can tokenize, you can add data, you can enrich the data and create templates to represent the asset, and then you can add rules and controls to the asset. Let me show you then how in 3 steps you can do that. We have created our asset. Remember the Newport 2 Digital Fund. I'm going to now add a data schema. I don't want to replicate and reinvent the wheel. So what I'm going to do is reuse one of the schemas that I have created for any digital fund, right? So I'm going to say this is a US money market fund. And this will give me the ability for my token to inherit all those properties. When I say inherit all those properties, is basically they will be added as data points in the smart contract, and they will be required to provide information. As you can see now, my Newport Digital Fund is now officially a US money market fund with these properties. Let's go ahead now and put some controls. First, I want to limit who will be interacting with those funds, right? So I go back to my fund and I will add the compliance portion of it, which is also a permission. By adding compliance, I'm going to say I want the Newport Digital Fund to have an allow list. And the moment I add that allow list that I had pre-created, you will see that the roles will be appearing and added to the token. The permissions, the compliance, you see here. Now I need to attach the roles. You see this is the new perform allow list. When I attach the roles, which I'm going to do now, the smart contract will show me all the actions, the tasks and the functions you see here. And now I'm going to be able to assign specific functions to a specific roles, meaning only the role that I assign it to will be able to perform with his wallet or its wallet the function that I assigned here. Typically will be minting a transfer agent, right? I'm going to allow the transfer agent to mint and burn. And I could say, for example, only my custodian can freeze the wallet or freeze the token, sorry. In these 3 steps, we have now created a digital fund that has these characteristics, these properties that describe it, that has this supply that I can mint, burn, freeze, clawback, and pause. It's taking a little bit while to populate. There you go, freeze and pause and clawback. This gives me the control and the compliance. And I can designate on a role based all the transactions that will be enabled in that token. And that's how you create a digital token.
Otto, thanks so much. For everyone in the audience, again, if you've got questions, and I think we addressed Paul's question, which was a really good one. Otto, I've got a couple of questions, and I want to do this for the benefit of some of our colleagues that are watching. Use the words clawback, and I know there are some crypto purists. If I said that too, I'd get in trouble. Otto, I think you and I and Otto were joking about that yesterday. Can you work through what an example, Otto, of a clawback might be, and how that might, how might someone watching this understand the functionality of that?
Sure. And like you said, an example is probably the best way to describe it. With cybersecurity and with there's so many regulations that are still managed off-chain, meaning not in smart contracts yet, right? Not communicating to the blockchain. Sometimes it might be difficult to control where the token, which is a value transfer, goes to, and potentially not comply with the market where it's been traded or listed, right? In the current the traditional or TradFi systems, that's the job of the clearers, that's the job of the risk operators and the broker dealers that are usually running know your customer due diligence, right? In the DeFi world, that becomes a little bit tricky unless you put it into the token. What the clawback action is doing is allowing that entity or that wallet, right? And I'm not calling it entity because it can be another smart contract. That wallet, if it is allowed listed, will be able to retrieve that token and return it to the original wallet, extract it from the wallet that has been transferred to. 2 examples. If a wallet is compromised, right, and the tokens are given to someone else that is not the real owner, the transfer agent or whomever holds the clawback functionality can retrieve the token, burn the one that was altered, let's say, or was stolen, and recreate it on the chain, right? That's one example. The other example comes from the control basis and the risk basis. If you think of securities that should not be listed or should not be traded in a jurisdiction specifically, we all know about the OFAC list and the black listed countries, right? You can limit the token to be traded, held, or bought in those countries by setting up a clawback, by setting up an allow list. And if by any chance that token goes into those jurisdictions, claw it back and burn it. So there's many examples, but it's in little the function of retrieving the value and the token.
Otto, thanks so much. We do have additional questions coming in. Again, everyone, thank you so much for joining us. Stephanie, great question. You might have alluded to it a little bit in your prior answer, Otto, but if you can dive into it a little bit more. Is a smart contract integrated within this?
That's actually a very good question, because everything that you saw is actually in a smart contract. Everything behind Factory itself is a composition of smart contracts. So yes, it is involved.
Yeah, and one thing I wanted to highlight as well, when Otto was executing the functions and setting the role context or setting the data, in the bottom of the screen, you may have noticed that there was a verification that confirmed that that action had happened. That's actually the smart contract verifying that the action has happened on chain.
For example, when
Got
I
it.
assign this to the transfer agent, there is a here transaction sent. You see?
Yep.
Otto, thanks so much. Chris Broderson, an old friend and a WSBA member, how easily editable are these tokens? In other words, if mistakes are made in assigning functions, changes related to service providers, custodians, transfer agents, or oftentimes I'd make human error and fat finger something by accident, Otto. How easily can that be corrected in the platform?
In the platform, easier than on the script, right? So if you make a mistake in a script, you will have to recode the script in many cases. In the platform, let's take the same example, right? And let's suppose that I had granted the permission of burning to the transfer agent, but I don't want the transfer agent to decide on whether to burn a token. I can easily delete that role, that function to that role, and reassign it, for example, to the custodian, if that was the case. Right, because the plugin capabilities, which is something that Factory enables, by attaching those functions in schemas, facilitates that. Otherwise, you will have to go directly to the script.
Otto, thanks so much. Manny, again, an old friend and WSBA members. Investors in capital markets require a qualified custodian to hold custody of their digital assets. How does the platform facilitate that interaction between investors and QCs? Otto, do you want to take a shot at that?
Yeah, happy to. So this is an example of integrating with the service providers of the issuer or the chosen party. Right now, the technology allows for the integration of the qualified custodian, both on the traditional side as well as on the digital side. So it's really a configuration problem that we would help our clients solve.
Otto, thanks so much. Paul with another great question. How are the transactions validated to the blockchain? How is the smart contract executed by the validators without compromising confidentiality? Otto.
The transactions are validated. Well, first of all, let me say that all the smart contracts that we deploy are audited by third-party auditors, right? And there's a huge amount of effort in validating and also testing, right, against risk, the smart contracts. But the validation happens through many ways. One is with monitoring the smart contract. We use tools also to monitor the transactions and validate them, and also by the confirmation that we get and the record keeping that we hold. I mean, remember that the transactions that are posted to the blockchain are immutable, right? So everything that has happened with the token, it is recorded there, and you can actually see it here. So that's part of the validation process that we apply.
Otto, thank you so much. Again, for everyone in the audience, thank you so much for joining us. If you've got additional questions for Otto or Ada, Otto, I've got a couple more, putting my old product management hat on. Can you dive into the tech stack itself a little bit more? Some of our colleagues certainly get deep into the technology. What do you script it off of? What is it built on top of? How does that scale over time from a throughput and capacity perspective?
That's an interesting question, because actually Factory was originally created on Stellar. It was created for a more permission and control blockchain. However, over the last 2 years, it has been expanded to become chain agnostic. We can deploy it to every blockchain. currently the most, obviously the most used and the most sought to is Ethereum. And basically, to put it at a very high level, we have the ability to host our own nodes or to use the client's node. We can deploy it in situ, which is some of the cases that we have with some clients where a dedicated instance is created in the cloud and connected to the node. Or we can also provide it as a SaaS technology where we control all the infrastructure, the node, the cloud tenancy, and these are applications that are deployed to that same cloud tenancy. Right? Once the applications are connected, and like I said at the beginning of the demo, we deploy Factory, we deploy the smart contracts to the same node. Capital markets and ledgers can also follow with the same deployment. And then you have the option as a client. And this is something important to mention. We also provide the API construction, right? So if you have an application or want to use our applications, these applications are connected to those tenancies and to the core engines via APIs, which in turn also connect Factory via those API files to transform those calls and put actions into binary instructions that go into the blockchain, right? But it's a very, you can think of 3 layers. You have the application layer, you have the cloud layer with the deployment of the applications, and then you have the 3rd layer, which is the blockchain, where you connect to the node via the APIs.
Otto, thanks. I want to address Marcus's really good question.
Ron,
Go ahead.
one quick correction, because Otto said that Factory was deployed on Stellar. Otto, you meant to say ComposerX was deployed on Stellar initially.
ComposerX
And then as we
that's what I
grew our
said, yeah.
capabilities and Factory became the key smart contract development tool, then we deployed on Ethereum. And just for everybody's interest here, the demo that you're seeing here, it's in a permissioned Hyperledger Besu version of what we use internally for demo purposes. Factory, it is deployed on Ethereum, or it can be deployed in Ethereum, and clients can deploy all the smart contracts that they're using or create a fund or an asset represented by a smart contract using Factory on Ethereum and EVM chains. We are working with other service or blockchain providers to replicate this model, but it's development work, so it's in our roadmap.
Otto, thank you both so much. Marcus asked a great question, and we've got one more after that as well. And I think you alluded to this a bit, Otto, in the previous answer with the multi-chain nature of this. Is this platform only EVM compatible? You indicated not. How do you deal with bridges to other chains? And Otto, I want to add one component to that I think is important as well. We often have the cybersecurity conversation where multi-chain bridges are vectors for cybersecurity risk. How is DTCC managing that?
Well, we have strong, all the standards that DTCC has offered in the whole infrastructure and with other services, in a high level, detailed due diligence, penetration tests, all the infrastructure that goes with the traditional TradFi is applied to this, right? We just finished actually a month ago our latest audit across all the 3 platforms. So we are aligning with the basic standards and the highest standards of cybersecurity. Now, specifically on the bridges, I'm not the person to talk to this. We'll be happy to put you in touch with our blockchain engineers that will better explain the bridges. But yes, definitely the concern about cybersecurity is something that is present, especially when it comes to managing risk. And that's where, at least at the token level, taking the enough controls as to how to control the token independently of the infrastructure is very important, right? And that's what the compliance, bringing the compliance as opposed to having the asset rely on the infrastructure, you bring the system into the token so that it is shielded from the token itself.
Otto, thanks. I want to reach out a couple more questions. Zagrita coming to us, WSBA member from Italy. Zagrita, thanks for joining. What potential do you see in the creation of a regulated secondary market for tokenized assets? How could it impact liquidity, investor access, overall market efficiency? You know, Otto, this often becomes the conversation we've all frequently had, which is how does the benefits of what we're talking about, leveraging blockchain technology, spill over into secondary market activity? Do you want to take a shot at that, or do you have some thoughts about Zagrita's question?
Yeah, I can definitely provide some insight into that. Secondary liquidity, that's been the biggest problem and something that we've been striving to solve for since even before the acquisition. There's a number of factors that affect secondary liquidity or secondary markets, and that is primarily, one is on the infrastructure side, right? So how do you create the standards and how do you create the operating model so that assets can flow from one account to the other without this fragmentation that we're currently experiencing. And part of that is part of the problem that we're working to solve on now with the capabilities that you saw in Factory, and then on top of it, building the operational framework that supports the smart contract transfer. The second part of it is from a traditional financial perspective. So I'll give you an example. For instance, a lot of our clients, call, we're in meetings with clients or members of the DTCC community and say, I want my DTCC asset to be DTCC eligible. And the question in the beginning of this, when this started popping up, we would always ask why. What does that mean? Because if you have an asset, like what does that give you that, an asset on chain doesn't give you? And, full transparency, this is when we just got acquired, right? So there was a lot to learn on our side as well. And the answer that we got is, well, having a DTCC eligible asset means that I can transact in secondary markets, and I can use DTCC as sort of like that one touch point base that allows me to send transactions to DTCC, and then DTCC is the clearing and settlement organization that then can broadcast it to other counterparties. And that really was just like a aha moment for us personally, where we're like, okay, this is a huge case for the acquisition, right? Like creating, and whether we call it a DTCC eligible asset or not, that's a different story, but creating a mechanism by which an asset can be registered to a party like DTCC, or can be managed by a party like DTCC to facilitate the transition between between broker-dealers, or the transition between broker-dealers that are interested in having this asset in digital form. So we are working to solve for that problem. There's not much I can share about at this time, but it is something that we're closely looking into.
Otto, thank you both so much. We'll make this our last two questions. Paul Doubting is on fire with the questions, and I think Manny's alluding to the same thing. Will not most of your clients want a private network rather than having their records on public blockchains? Or, to Manny's question, similarly, market participants don't want their competitors to know or track their trades or on-chain positions. What's the DTCC response to that, Otto?
We're agnostic for the most part on this topic. So what the client wants, we're able to provide for them. So we can support our platforms in a private permission blockchain, and we can also support we can provide our technology to our clients who want to issue an Ethereum. I hear from the asset manager community that issuing on a public blockchain has some benefits to it, because it allows for the application of the asset in the DeFi ecosystem, so that they can use that asset into other distribution venues. This is something that, it's interesting to see how the market perceives privacy. I mean, the fact that an asset is on chain, you can see a lot of things, but we see big asset managers like BlackRock and Franklin Templeton that are not shying away from public structures. Now, with that said, there's the activity that happens on chain, right? And then there's like the activity that happens off chain, which, and a lot of this work is then facilitated with our capital markets platform, which is the other product that I was talking about earlier, that gives you the opportunity to register clients in your off-chain databases, right? So like in the records that you have in-house and are protected with the PIIs and all of that, and then gives you the ability to manage wallets on behalf of those clients, that only that organization, that service provider, would know what wallet belongs to what clients, and it would almost kind of be considered like an account of the client, right? Like think of your account number at the bank, right? And that is one way to solve for it. But this is an open challenge in the industry, and it's part of the sort of like the 3 points that I was raising earlier about figuring out an operating model that protects the client while leveraging the efficiencies of the public blockchain is, a balance that we are striking.
Ada and Otto, thank you both so much. Thank you everyone for joining us for the great questions. We're hoping this is the start of many other webinars, Ada, like this, as different capabilities in different parts of the platform roll out. Ada, if people want to learn more about what you're building at DTCC Digital Assets, how do they find you?
Absolutely, yes. Please follow us on LinkedIn. We are launching or have launched a monthly newsletter that we keep that we use as a venue to keep our interested party informed about the work that we're doing. We will be at Consensus. So if anybody is at Consensus, please stop by our booth and come and say hello. And we're happy to talk more about some of the other use cases that we're speaking about. And feel free to shoot us an email. Otto and I, Ron has our email, so we can happily to connect.
Absolutely. Otto, thank you once again. For everyone who dialed in and watched the webinar, thank you so much. If you've got additional questions, info@WSBA.co. We are out of time, exactly as we planned. Otto, thank you both so much. It was such a privilege. We will chat again with you soon. Thank you, everyone, for joining. Bye-bye.
Thank you very much, Ron. Thank you, everybody.